Hello and welcome to Startup Street. I'm Arundhati Ramnan and these are the top headlines that we're tracking for you from the startup world. Wearables major Boat sets sail towards an IPO yet again after withdrawing its draft papers in 2022. Plans to raise 2,000 crore rupees at a valuation of over $1.5 billion. However, will take the confidential filing route this time around. Walmart-backed PhonePe is gearing up to go public soon. Stopped short of announcing a timeline. PhonePe, then moved domicile to India in late 2022, was valued at $12 billion as per the last funding round in January 2023. Marketing company Wubba Lubba Dub Dub in talks to acquire digital media platform Scoop Whoop from the Good Glam Group, says a Live Mint report. It claims that the Good Glam Group is planning to sell Scoop Whoop for 18 to 20 crore rupees. Scoop Whoop was acquired by the Good Glam Group in a deal worth around 100 crore rupees in October 2021. The Good Glam Group did not respond to CNBC-TV18's queries. Powertrain controls and auto parts manufacturer Sedimac Mechatronics is ready to raise between 800 to 1,000 crore rupees via public issue, says Money Control. Sedimac's public listing plan comes nearly 10 months after the company secured $100 million in funding from Exponential Capital Partners, A91 Partners and 361 Asset, valuing it at $230 million. Kerala aims to have 15,000 startups and create 1 lakh employment opportunities by 2026, says CM Pinarayi Vijayan at the Invest Kerala Global Summit. In the last 8 years, Kerala saw the establishment of 6,200 startups with an investment of nearly 6,000 crore rupees, creating 62,000 employment opportunities. Those were the big startup headlines that we're tracking for you this evening. Now to a CNBC-TV18 exclusive. Electronics brand Boat is planning to hit Dalal Street in the next fiscal year. Sources have told CNBC-TV18 that the company is planning to raise 2,000 crore rupees. Rachna Dhanrajani joins us now with the details. Rachna, what are your sources telling you?
Sources have told CNBC-TV18 that Boat is gearing up for another shot at the public markets, planning to raise 2,000 crore rupees through an IPO in FY 25-26. This comes after the company withdrew from the process in 2022 due to market conditions. The company took the private funding route instead and rose funds from its existing investors that included names like Qualcomm Ventures, Warburg Pincus and Fireside Ventures. But now sources tell us that with a 26.7% market share in India's wearables segment, Boat is preparing to re-enter the IPO fray, but this time through the confidential filing route. The company's revenue saw a 5% decline in FY24, falling to about 3,200 crore. But the silver lining was that its losses were halved to 70.8 crore rupees while maintaining positive EBITDA. Despite the audio segment remaining flat in H2 FY24, sources tell us that Boat's online sales have picked up, with the Diwali season providing a much-needed boost. However, a key challenge for Boat remains the China supply chain dependence, as the company continues to source a significant portion of its components from China, and though they assemble it in India. To navigate market uncertainties and protect its business strategies, Boat has chosen the confidential filing process, a method introduced by SEBI in November 2022. This allows companies to privately file for their IPO documents, keeping financial and strategic details out of the public eye until they decide to move on. This also protects them from speculation and rivals. Boat isn't alone in taking this approach. Food delivery giant Swiggy also opted for a confidential IPO filing recently. This process provides 3 major advantages. First, it protects sensitive business information in case the company decides to delay or withdraw its IPO. Second, it offers greater flexibility. Companies get about 18 months to launch an IPO after SEBI's observation instead of the usual 12 months. And third, it helps avoid premature public scrutiny and litigation risks, all of which makes sense for Boat considering this is a second attempt at this. By adopting this strategy, Boat is keeping its IPO plans tactically flexible, ensuring it times the market right and secures an optimal valuation, which could, by the way, exceed $1.5 billion, according to our sources. We reached out to Boat for a comment, but haven't received a response yet. Back to you.
Right, Rachna, many thanks for those details. Now, moving on, natural pet treat brand Dogsee Chew has raised $88 million in its Series B round led by Ekta.com. The round also saw participation from promoters, Shivansh Holdings and Podar Family Office. The brand has raised a total of $22 million in funding till date, including the current round. The new funds will be used to scale up manufacturing capabilities by expanding existing factories and constructing a new production facility. Joining me now to discuss this further is Bhupendra Kanal, the co-founder and CEO of Dogsee. Bhupendra, thank you so much for taking time out and being here with us on Startup Street. You know, you're a natural pet treat brand, right? Can you take us through what you have on offer and what makes you different from the various treat brand options that are already available in the market?
Yeah, so the route that we took from the start, right? This brand actually came with the requirement that we saw for our own dog, right? Where when we give a treat to a dog, we should not be feeling guilty that we're giving something harmful, right? So because most of the dog treats are made from the byproduct of the human food industry or the leather industry, right? So technically, they are not healthy for the dogs. So what we thought is we actually built something which is very interesting. We started with the chew that is made from 100% milk, from yak milk. We started, and then later we expanded to yak milk plus cow milk to increase the production. But when we got this product to the market, right, this was insanely good. Number one, this was made with the Himalayan milk, absolutely 100% natural. We don't use any preservatives or chemicals. Third, it is very hard as any dental chew in the industry. So it perfectly fits as an dental treat, which is a must give to the dogs. Right, and it also has 60% protein, which is more than any other meat-based treats in the industry. So we actually gave the world a really good treat that it needed, and we have been doing this for the last 2 years.
Yeah, so it's a healthy option for your dogs and came about from your own need to provide your dog with a good treat. But you've raised this $8 million and it's primarily for expanding your manufacturing capabilities, right? If you could quickly tell us your current production and by how much do you want to scale this and where will you be building the new state-of-the-art facility?
Yeah, so we have dual uses for this fund. Number one is expanding the current capacity. So as we speak, we are in the chews category, we are already the number one player in terms of production in the world. So we want to consolidate on that and then take it even to a higher volume. So we have to double the capacity in next 12 months. The other main thing that we needed this fund is to do a massive global launch, especially focused on Amazon first strategy in US, UK, and the European markets. So with Amazon, so we are targeting to actually reach a lot of large customer base where we could not have reached otherwise directly through the company. So currently we're depending on the distributors. So we're planning to use both the distribution as well as the D2C strategies.
Right. Okay. And you're a premium brand, right? That's how you position yourself. Can you take us through the kind of demand that you're currently seeing and what's the best-selling product and what about pricing? How competitively priced are you?
Oh, we are actually a very premium product. If we see just from the price point, like we are the costliest treat in the UK market, so you can understand, right? So we are really premium product and the brand. But the way that it brings to the use case is it is an amazingly good treat. So any dental treat from the competition, like if it is given to a dog, right? Dog usually finishes in a couple of minutes. But when a Dogsee Chew bar is given to a dog, right? Dog takes usually 1 hour to 2 days to finish based on the health and the age of the dog. So we actually give a lot of utility benefits. And that is our biggest selling point, a nutrition with a extremely good use case.
Right. And how many orders do you get typically on an annual basis? And what's the percentage of your orders are reorders? And if you could tell us where your revenues are currently at?
Okay, so we have chosen not to bring our revenues out for some reasons this particular year. But I can give you some of the numbers that could be interesting. So our largest market is UK, but the fastest growing market is the United States. So we have solved more than 50 million treats so far. We have reached to close to about 30 million pets globally. And as we speak, we are in 30 countries selling in both online and offline mode. And in terms of the number of stores that were present, we have already crossed over 50,000 stores globally.
All right, Bhupendra, thank you so much for joining us on the show, but we're completely out of time and we wish you all the best on this journey going forward.
Thank you. Thanks so much for having me.
And moving on, Razorpay, now over 10 years old, has had a front row seat to India's fintech revolution. And the past 12 to 24 months have also included critical milestones such as re-domiciling to India, getting RBI's approval for their payment aggregator license, and also processing over $180 billion in total payment volumes annually. We're here at Razorpay's annual flagship event, Razorpay FTX, to speak to its founder and CEO, Harshal Mathur, about what's next for the fintech unicorn. Take a look.
It's always great to look back at the journey and then see what's next. And that's been something that we keep focusing on, that, hey, we have achieved a lot in the last 10 years, but the world is just changing so rapidly. And of course, the biggest thing that is the focus for this year's event and this year's launches is AI. I've said it before, like AI is going to fundamentally change every process. Things that we see, hey, this is done and this is the best we can do, is not the best anymore. And most of our launches around that. So when we said, hey, our onboarding is the best and the best you can get, we said, like, AI changes it. It is not the best anymore. Similarly, like, our developer documentation and integration is the best that can be. But the AI changes. Now you don't need to look at documentation. You just ask your AI, hey, can you integrate this for me? And it'll do it for you.
Well, sounds like a very costly affair to having to upgrade your products every few years with the new technology, right? You said it's been, of course, 10 years now for Razorpay. If you sort of look back at the journey in a time lapse, and you showed us the video of that founder that really probably resonated with a lot of people in the audience, including you. Did you have such moments when you look back that stand out in these 10 years?
Oh yeah, so many. Like the startup journey is full of ups and downs. A lot more downs, a lot less ups. So the ups are a lot more visible outside. The downs are a lot more visible inside. So it's been it's been a roller coaster journey, and I couldn't be more proud of it. I think we are here because of all of that had happened. I think some of the most hardest parts were from day one, like both of us coming from completely technical background, completely non-finance background, to getting into a space of finance, to a space that's regulated, to getting a license, to starting something in that space, and then every day, like, figuring out, like, how can we use technology to change it. And I think the focus for us, the only brand value for us, was that we'll be the most innovative company that's...
But, you said the downs are really what you see inside. The world doesn't see it. But what have been the biggest ups, you'd say, if that's something you can disclose?
Yeah, biggest ups, I think, day one, I think getting the first 100 customers was an extremely hard affair. I remember both me and Shashank used to go to co-working spaces, go to random Bangalore startup groves and say, hey, we are building a payment gateway. Do you want to try it out? And there are people who say, yes, we are interested. And we'll actually go to their offices and sit and code their payment gateway for them. Because, like, we didn't want them to have any reasons to say, hey, I'll take a few more weeks, I'll take a few more days. He'll say, we'll sit in your office and code it for you. Can you just give us a shot? I think, and when any customer would go live, I remember in the early days, we used to have this channel where every single transaction would be shown. So, not the names, but like a 20 rupees payment happened, 100 rupees payment happened. Every single transaction we'll celebrate. So if somebody did a large payment, like at 10,000 rupees, we'll just celebrate. Hey, somebody did a 10,000 rupees on Razorpay. And so, that's the time, and today, of course, as you said, like, we do $180 billion of payment volume. So there's no end to how big India can be.
You had a bit of a pause here because RBI was in the process of approving your license for the payment aggregator business. Since then, have you more than made up for the time that you had lost during the process? And how many merchants do you have now, and what pace are they growing at? So
the 1 year, almost a year, 10 months is when we were paused from onboarding. And of course, that was a pretty hard time, I would say. Those are one of the downs because for a fast-growing company like us, because for a fast-growing company, when you're not growing, that's really hard, because there's a large team that focuses on growth, that focuses on getting new customers, answering their queries, doing that. And we took a call, first of all, that, hey, no jobs will be affected. So we didn't do any layoffs, any downtimes. We moved our teams, reprioritized things so that we could still utilize, because we knew that, hey, it's going to get approved. Like, it takes 10 months, 12 months, whatever, we'll figure our way out of it.
What is FY25 looking like now that you're close to the end of the year?
Yeah, FY25 has been actually the year of our fastest growth in the last couple of years, because we came out of the embargo, so there was a lot of latent demand through the year. On an overall basis, our payment business is profitable, and it's doing really well. It's growing, scaling up from there. The other aspects of the business, so the payment business is profitable and growing at about 50 to 60% year over year. So that's an amazing growth for that large business. The other aspects of our business, while not profitable yet, are growing at 100% plus year over year. So those are our growth drivers. So this is Razorpay X, Razorpay Engage, our international business, our POS business, all of those are growing 100% year over year.
Yeah.
So a lot of growth coming out of that, and I think that's the right balance as a company, that we have one business which is profitable and growing well, and the other business is growing really fast and we continue to invest in. I think at least for the next 1 year, we expect this is how the ecosystem will be for Razorpay.
Okay.
I think in a year or two out, I think we'll be profitable at an overall level, and that's when we feel we'll be the right place to look for a listing or something like that.
Since you brought up the listing, bring us up to speed. You're in the process of re-domiciling. How much is that costing you? When is the process going to be completed, and how large a listing are you looking at?
Yeah, so the flip should take maybe 3-4 months more. I think it's not in our control. It's a regulatory process. The tax is also not in our control. So there are the figures around here and there, but the actual number will depend on how the regulators value us and how much they decide that we need to pay. It's a large number, but I think it's a heavy cost, but it's a small price to pay for coming back to India, the way I would put it. I think once that flipping is done, it will take about a year and a half or something from there to go public listing at the minimum. So I'll say we are at least 2 years away from our public listing.
Okay, so 2027 is the year that Razorpay will be publicly listed?
Fingers crossed.
On that note, it is time for us to head into a short break. But coming up on the other side, a conversation with Lightspeed India's Managing Director, Anuj Bhargava, on Liftoff, a 2-day portfolio investor day hosted by Lightspeed. Stay tuned for more.
Anuj, many thanks for joining us on Startup Street today. And
Welcome back. You're still with us on Startup Street. Multi-stage global VC firm Lightspeed is hosting its third edition of its two-day Portfolio Investor Day Liftoff in Mumbai. The event enables investors from over 100 global marquee funds to interact with leading Lightspeed India and Southeast Asia-backed startup founders. My colleague Shruti Mishra caught up with Anuj Bhargava, the managing director and head of corporate development at Lightspeed, on the sidelines of the event. Take a look at that conversation.
Anuj, many thanks for joining us on Startup Street today. And you know, we exactly met a year back at the second edition of Liftoff, and this is the third edition. So tell us, how is this bigger, better, and what is the kind of impact you hope to make?
Thank you, Shruti, once again for having me here, and it's great to see you again. You're right. I mean, you know, this is the third time we're doing, you know, Liftoff, which, you know, is our marquee event. It brings together the best and brightest founders from our portfolio together with you know, a wide variety of global funds. And I can't remember the numbers last year, but this year we've got 40, 45 companies meeting, I think 120 investment funds across you know, stages. This year we've also called you know, a lot of pre-IPO funds and family offices as our companies have sort of, you know, matured and grown.
And you know, you mentioned global investors are coming in. I want to talk about the funding picture, both domestic and globally, for the Indian startup ecosystem. What are your general views on this? And also in this process, you know, what role do events like Liftoff play?
Good, that's a great question. So look, I think, you know, to answer your first question on the funding, look, I think, you know, the Indian early stage venture ecosystem is extremely robust. You know, we've obviously not seen the levels of activity that we saw in 2020 or 21.
Yes.
But I'd say there's a very healthy level of deal making going on currently. To give you an example, you know, we at Lightspeed, I think, wrote about 15 or 18, you know, new checks last year. You know, and in addition to that, we wrote about 12 follow-on checks into our companies, which I think has remained sort of fairly consistent throughout. So I'd say that the funding environment is great for early stage companies, even for growth names and late stage growth names, you know, that have pegged themselves to the public markets. Obviously, we've seen a bit of a correction recently, but the overall environment has been extremely robust. And, you know, of course, markets go, you know, in cycles, and, you know, we're seeing, you know, valuations come off.
Yes.
But we're extremely positive on the overall outlook, both on the public side and the private side, for new age companies in 2025.
Okay, let me now shift focus to the IPO market in India that saw a surge last year. Even in 2025, we've got a beeline of startups that are going to hit the bourses. What factors, Anuj, are driving interest in public market listings?
Look, I think, you know, the market in general is very hungry for new age companies. Let me give you an interesting stat. In India, new age technology companies form about 3% of the overall market capitalization. In the US, that number is 30.
Yes.
So there's a tremendous amount of scope for new companies to list. And, you know, as long as they have the right equity story, they have a large market, they have market leadership, and they have sustainable unit economics, we'll continue to see a wave of listings from internet companies even in 2025.
All right. Let me talk about some of the emerging sectors, according to you, that are going to be of interest, and your top bets, you know, the hot sectors for India and Southeast Asia.
Look, I mean, we've stayed, you know, very fundamentals focused and first principles across, and, you know, we're largely, I'd say, sector agnostic. You know, so we continue to back the best companies in India and Southeast Asia in consumer, in enterprise, in fintech. We've obviously, you know, have taken, you know, a very strong view on quick commerce as well with our, you know, investment in Dizepto, which we're very excited about. We also backed PhysicsWallah last year, which is again, you know, a company that hopefully will IPO this year.
Yes.
So you can see the spread of sectors throughout. In terms of some of the new emerging sectors, of course, look, you know, we've, as a global fund, taken a very positive view on AI. I think last year, you know, 70% of our dollars deployed globally were in AI.
Okay.
And even in India, look, I think, you know, we've been very active at all levels of, you know, AI investments, whether it's the foundation level with Sarvam, or it's the infrastructure level with Portkey, or frankly, it's the application level with Cure AI. We've been very active, and we hope to continue to do that this year as well.
It is Friday, and it's time to take stock of all the deals that took place in the startup world this week. According to Venture Intelligence, this week saw 11 deals worth $134 million. B2B e-commerce unicorn Udaan got $75 million from Lightspeed Ventures and others, while visual merchandising enabler for the auto industry Spine raised $16 million from Vertec, Axel India, Storm Ventures, and Ulterior Capital. That's not all. Singular AI raised $10 million from Nexus Venture Partners and Dell Technologies Capital, while pet street brand Dogsee Chew got $8 million in a Series B round. Meanwhile, Rare Rabbit bagged $6 million from A91 Partners. This year has seen a total of 132 deals worth $1,183 million. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.